Hey, Jason here. Today's video, we're going to answer the question, is Biopharma stock, Sage Therapeutics, stock ticker SAGE, a good stock? This is an analysis for Akash D, who requested this on YouTube.
Before we get to that, though, I need to let you know you can get this series as a podcast anywhere in the world for free on all major podcasting platforms: Stitcher, Anchor, SoundCloud, Spotify, iTunes, and more. You can get this part of the I Love Value Investing podcast anywhere in the world for free. And if you like this video here on YouTube and our other videos, make sure to subscribe, hit the notification bell so you're notified every time we release a new video, and release new videos all the time.
Okay, I apologize for this. I don't want to do this. I have to do this because every time I don't, I get nasty comments. This is for your informational purposes only, to help you learn how to evaluate stocks better and faster. So you spend less time looking at crap stocks, more time looking at potentially great investments. These are also requested by viewers. Because of that, I often don't know what the company does. Like today's video, I've never evaluated this company before. I don't know what they do. Because of that, if and when I don't know what the company does, I keep it that way purposely. Why do I keep it that way purposely? Because I don't want what the company does to bias me either negatively or positively in either way. This also means I don't care about what the company says they're going to do. I don't care about how the CEO says they're going to transform the world. I don't care about any of that until far later in the analysis. At this stage, I need profits, cash flows, margin of safety, valuation, balance sheet strength. I need these things at this stage of the analysis for the investors, or for the portfolios I manage for my investors. I also don't short sell ever, so I'll benefit from any stock I talk negatively about. I also don't own any stock in a long position, any stock I talk positively about. Again, this is for your informational purposes only, to help you learn how to better and faster evaluate stocks. Now, why should you listen to anything I have to say? Because in the first 9 years of my career, I've produced average annual investment returns of 23.5% per year on average in the portfolios I manage. This puts me just behind the great Warren Buffett, who earned 24.2% average annual investment returns in the portfolios he managed at the Buffett Limited Partnership back in the 50s and 60s. Now, I'm not saying that to brag. Frankly, I don't even like saying this. But I am saying this to prove to you that I actually know what I'm talking about a little bit. Okay, again, apologize for that. Don't want to do it. Have to do it. Okay. So, here is Sage Therapeutics. First thing I notice is they are near their 52-week low, which is a bit surprising. Most stocks right now are near their 52-week highs. So that's a bit surprising to me. Could mean that they are undervalued. Could mean there's some kind of issue going on that's driving the stock price down. Those kind of things. This right here, again, I don't care for PE at all, if you see my other videos. But when I do, I want this to be under 20. This showing no number here means, or is in all likelihood, means the company is not profitable. At least on the earnings basis or the net income basis. Okay, so Sage Therapeutics Inc. is a clinical stage biopharmaceutical company focused on the study of the nervous system and brain to discover medicines to treat life-threatening, rare central nervous system disorders. The company's lead development program is Sage 217 program, which is in phase 3 clinical trials for postpartum depression, essential tremor, Parkinson's disease, and major depressive disorder. The company is also developing several other compounds for treatment that are in the early stage of development. So they are a biopharma company looking to treat several, frankly, major disorders. Ooh, their revenue has skyrocketed from 2018. Normally, again, I talk about the last decade. Most of their numbers, they do have numbers before 2018, but most of their numbers come up only in 2018. I'm assuming, based on them being a biopharma company, that they were spending a lot of time developing before this, and they finally got a product to market and started selling it in 2018. I'm assuming that because they have a negative operating income, massive negative operating income before 2018. So their revenue has skyrocketed from $90 million in 2018. It went down drastically in 2019 to $7 million. Then it jumped huge in 2020 to $1.1 billion. That means they got some kind of major contract. They started selling their product more. They got some traction with doctors, something along those lines. So what that means here, if this analysis goes well, we need to figure out what happened between 2018, 2019, and then the massive jump in 2020. Do they have a therapy related to COVID that's treating COVID? Possibly. I don't see that in here in the description. That could be a possibility. But that massive increase has taken them from enormous losses in 2019 and before to enormous profits in 2020 and beyond, from negative $708 million operating profit in 2019 to $624 million positive in operating profit. That is a gigantic increase. Frankly, because of that, because of, again, nothing before about 2018, 2019 timeframe, and then a massive jump in 2020 in revenue, operating profits, all the things. We need to figure out not only what happened, but what is likely to be sustainable. Is it going to be a massive increase in revenue? Is it going to be the $7 million in revenue in 2019? Is it going to be somewhere in the middle, above, below? We need to figure that out and be absolutely comfortable with that decision. Okay, they have increased shares pretty dramatically from 2012 at 17 million to 56 million in the trailing 12-month period. Frankly, that's not a surprise because they were enormously unprofitable before 2020, and they had to continue selling shares, most likely issuing debt, which we'll see in a minute, to continue sustaining the company because they were not earning profits before that. That has led to a massive increase in their book value per share as well, from 2014 at $5.19 per share to $32.81 per share. That's what happens when profits increase enormously. Typically, book value per share goes up as well. We also need to make sure this isn't acquisitions, and if it is, that this isn't due largely to things like goodwill and stuff like that. We'll see that in a minute. Massive spending up here, which is not a surprise because they were massively unprofitable in 2018. SG&A was 223% of revenue, and R&D was 312.5% of revenue, which is why they had such a huge loss, negative 435.6% operating margin in 2018. You usually don't talk about this up here, but this is another section you can look at to see costs, revenue, all that kind of stuff, margins. And that immediately caught my eye when I was scrolling down things because it's massively negative. Okay, ROICs were not fantastic until last year. They were massively negative. I look for anything above 10% consistently. This beats that threshold last year and so far this year, at 38.7% in 2020 and 48.8% in the trailing 12-month period. Again, we need to figure out, this most likely is all going to go back. We need to figure out what's going on, what happened. Is that going to continue? If it's not, they're going to be massively unprofitable. If it is, then they're going to be likely pretty profitable. We also need to figure out, is that Biopharma, are there Biopharma remedies that they're selling now? Are they patented, and how long do those patents last? Typically medical patents like this, again, depends on exactly what it is, but they're usually 5 to 10 years, typically 10 years. So we need to figure out if it's patented, how much longer does the patent last, how valuable is the patent, all that kind of stuff. Okay, free cash flow sales, again, hugely negative until last year. And then it was 59.6% last year, 63.6% this year in the trailing 12-month period, which I'd look for anything about 5% on a consistent basis, so that is fantastic if that continues. They have a ton of cash on the balance sheet. 94% of their balance sheet, 94.8% of their balance sheet is in cash, which is phenomenal. They do not have any intangibles listed here, which is a bit surprising because I would expect there to be intangibles as a percentage of the balance sheet here if they have some patents. So we need to figure out what's going on there. They have a very clean balance sheet. It looks like we'll see the actual numbers, but as of now, it looks like they have no short-term debt, no long-term debt. So they have a ton of cash, no short-term debt, no long-term debt, which are great. They don't have cash conversion cycle. Sorry. So we'll move on to the balance sheet, not the quarterly. And they have cash equivalents, and short-term investments. They have about $1.91 billion worth. That is about the market cap, is it not? It is. The market cap right now is $2.4 billion rounded up, which means they have almost as much cash as their entire market cap. Another way to think about that is that the market is valuing them at only the value of their cash. We'll see what that looks like as we go forward, but that's another way to think about it. Almost no liabilities of any kind. They have an incredibly clean balance sheet. Let's go to the cash flow statement. And they bought something for about $1.6 billion this year. They sold some other stuff for about $670 million. Let's figure about that, what that is. Other than that, their cash flow statement is incredibly clean as well. So, Sage Therapeutics acquisition. Aha. So it wasn't necessarily an acquisition. They got $1.525 billion in cash, which is where most of the cash came from. Well, actually was not, a bit surprisingly, from the sale of shares or issuing of debt. It was from a deal with Biogen to jointly develop depression and tremor therapies. Will include a massive upfront payment of $875 million, $650 million in equity, as well as potential milestone payments of up to $1.6 billion in profit sharing and royalties. Zurolone is their drug, major depressive disorder, postpartum depression, psychiatric disorders. They will also use this money to develop Sage 324 for tremor and neurological disorders. And it goes into stuff about the company. So Zurolone is already in phase 3 trial, while Sage 324 is in phase 2 trial. So these are not on the market yet. Where are they generating their revenue from then, is the question. Or did they mark some of this as revenue? So they do have a drug out there already. It was approved in March 2019. First and only drug approved for postpartum depression. So that is why their revenue skyrocketed, because it's the only drug approved for that. And I'm assuming that's where most of the revenue came from. Goes into a bunch of other stuff. And clinical trial stuff. This is important. Sage is not the only company with a compelling drug to treat major depressive disorders. The company's initial failure of their phase 3 trial of Sage 217 in 2019 allowed Axsome Therapeutics to take the lead in the race. Okay, so this is all just trial stuff and medical jargon. So we figured out where the money came from in terms of the revenue. Excuse me. Figured out what the investment was. They got a bunch of cash. And actually, let's go back over to here to see how much cash they're burning. So they're not burning cash now. They were burning a ton of cash. Now they're not burning cash. They're profitable based on the revenue and also the investment. They're profitable. How much are they spending on R&D? 25%. So they're still developing stuff. They're still doing trials. So, but now they're not burning cash at least. So that is good. So at this stage, looks like a decent potential investment. If they can continue doing what they're doing when it comes to trials and new drugs and all that stuff. I'm assuming that that agreement with Biogen is also contingent upon some milestones of that drug, Zerolone, I think is how you pronounce it, of getting out of trial phase and producing revenue as well. So I'm assuming there are some, I'm not necessarily kickers, but clawbacks maybe from that if it doesn't. But as of now, they look incredibly undervalued. I'll get to why in a second. But they're, again, I don't care for PE, price to cash flow, forward PE at all, but their PE being 3.25, price to cash flow being 3.37, and then they don't have a forward PE. I look for anything below 20 on these metrics, and that these in 3 range are well underneath that. Biggest reason I said they're undervalued is because of the enterprise value to EBIT number down here, which is 0.91. Off the top of my head, that is the single lowest enterprise value to EBIT I've ever seen. Now, does that mean they are massively undervalued? Though, in this case, I don't know yet, frankly, because they have a large one-time payment from that investment. They still have to get that out of trial to get the rest of the payments from that. Their one drug seems to be taking off based on the numbers. And so I'm thinking out loud here is what I'm doing. So and they have a ton of cash on the balance sheet. Their cash on the balance sheet is about 1.91 billion. Their market cap is about 2.4 billion. So they are selling about for the value of their cash. That essentially never happens unless there's some kind of major recession going on. So that raises some red flags to me. Do people who follow these biopharma stocks more than I do, because frankly, I don't follow this industry very much, do they know something that I don't know? Do they know something in that this drug is not trialing well? Do they not expect this drug? Do investors not expect this drug to be approved? Do they not expect it to work and sell well? With stocks at or near all-time high valuations pretty much worldwide, that gives me major pause to further evaluate this company. Because again, I don't care about the company's story at this point. However, they are so enormously undervalued based on the enterprise value to EBIT and their just simple cash levels. Actually, they're so undervalued. Are they selling below their NCAV value? Which I need to go back to the balance sheet for that. An NCAV value we have not talked about, I don't think, here, because frankly it's insanely rare with companies' valuations absurdly high. NCAV valuation is also known as a net. It stands for net current asset value. And this means, or this valuation shows that a company is selling for less than just the value of its net current assets. After subtracting net current assets from total liabilities, the company is selling for less than that amount. And actually it won't be because they're cash, but their net current assets, their current assets are 1.99, most of that in cash, minus what are their total liabilities. So 1.9 billion is their NCAV value, which is just about their market cap. Again, so they are insanely undervalued, which again, I keep going through into my head. That gives me enormous pause about this company because of the stuff I talked about. Problems. Is there any hope left? Shares have declined by 80%. That was more than a year ago. Let's go with this more recent one. Unhappy with lackluster results. Trial. That's why. So during their trial, and this was released in June, during their initial trial, patients' results only improved by 1.7 percentage points compared to the placebo. So that's why that's a big reason their stock is declining. Because even if this helps, if it doesn't help enough for the price, and I don't know what the price is, but I'm assuming this would be expensive, then that means people wouldn't buy it, and that is probably why people wouldn't, or investors aren't expecting much from this cash that the company has. And according to this, they burned through about $96 million in the first quarter while they work to get this to commercialization stage. So this is still far off, this deal. So there are more problems. Risks. And this is all medical stuff. This is not stocks. And again, I check this for pretty much every company I do to see if there's any fraud allegations. I'm not seeing anything major. These kind of things up here are brought on smaller companies a lot. They typically mean nothing, or they typically end up doing nothing. Stuff like that. So I'm not seeing any major red flags in terms of fraud. I am seeing the major issue with the before I bring that over, actually, with the issues I brought up about their drug not performing super well and their stock price cratering in 2019 from 2018. Something's going on here. And again, I do not, in full transparency, follow biopharma stocks much, but when I do, these are too many red flags for me, especially when the undervaluation is so much right now. Again, the cheapest I've ever seen on the EV to EBIT. Again, that's not my calculation, but based on Morningstar's numbers, that concerns me for the reasons I talked about. This all concerns me enormously. And for these reasons, I will not. Since February 2018, they're down 73.7%. So my guess is, actually that doesn't line up with the numbers. So numbers, oh, that's from when they had that massive crash from 90 to 7 million in sales, and then they had a massive pop last year. But why, if they had a massive pop last year, why is their share price not up? That, again, all these things, something's going on here that I don't understand. Again, I do not, in full transparency, follow biopharma stocks a ton, but something's going on here I don't understand, and I'm not, even though it's enormously undervalued. Again, these off the top of my head, the single most undervalued EV to EBIT I usually look for. I look for anything under 8. That 0.91. When I first saw that, I was like, holy crap. But there are so many things I don't understand about this industry. And again, I don't think we've gone into this in these videos before. So this is a fantastic case study. But there's so many things I don't understand that look like potential major red flags here that are going to make me not want to, or going to lead me to not researching Sage Therapeutics further. Why? If they are enormously undervalued and they're selling about the value of their cash, and I'm a value investor looking for undervaluation, why am I not going to look further at this company? Because when I don't know something, or when I don't understand something, again, the major undervaluation when almost everything else is overvalued, the stuff about their drug not being super helpful in terms of the placebo, all the other stuff that we talked about, I don't invest. If I don't understand something, or things aren't adding up to me, and there's a lot of stuff not adding up to me that we talked about here, I don't invest. No matter what the undervaluation is. And that's probably weird coming from a value investor who talks about all about valuation, and I do, and it's super important. But I also have to understand what's going on. And there's some stuff here that while I could understand it, I don't want to, frankly, because again, at this stage, I don't want to be biased either negatively or positively by what the company does or what they say they're going to do. These rules are not just rules for show. I don't care at this point. Do I hope that they work and their drugs work and they make a lot of money? I do, because again, I want all companies to succeed. But as an investment for the portfolios I manage, there's too much risk here. There's too many unknowns. There's too much I do not understand. Why do I say that? Why do I keep saying that? Because any analysis I do, I want to find a legal informational advantage in the financial statements, in the Google News, in all this stuff. I don't have an informational advantage in this industry because people follow this industry, the biopharma industry, a lot more than I do. And they're seeing, based on the market price compared to their cash levels being pretty much equal, that they should be only valued about the value of their cash. Again, that makes no sense when other companies are valued at or near all-time highs, and pretty much everything is overvalued. So I'm not seeing something here that these other people are seeing, and I'm going to trust in my intuition here, and I'm not going to further research Sage Therapeutics, even though they are enormously undervalued, at least based on the initial look. That could change, looking at the financials, looking at the terms of the deal they signed with Biogen, all that stuff. But because of these reasons, I will not look at Sage Therapeutics further. However, who requested this? Akash D. This is a fantastic case study. I love this. We talked in today's video about a lot of stuff we didn't talk about. I love this case study. So even though I will not personally look at this further, might be some opportunity here if you can get over the risk and the things that I talked about. So hope you like this. I found it entertaining. Again, don't got to talk about a lot of stuff we never, frankly, rarely or never get to talk about here. So love this case study. Thanks Akash D, as always. Actually, I think this is your second video maybe that we've done, so thank you so much for being here and requesting this video. This was fantastic. If I missed something, if I didn't explain something well enough, if I should explain something better, let me know in the comments below. This is not just for Akash, this is for anybody. If you want to know something else about this company, let me know. Or if you have more insight into this company, let me know. Because again, biopharma is not my specialty. If you have more insight into this, let me know. Frankly, I would very much appreciate it if you let me know, because now I've got my curiosity going. So, if you want me to look at a stock like this anywhere in the world for you, I will do so. If it meets 3 criteria, has to be, or it can't be a bank because I don't evaluate banks. Can't be an insurance company because you actually have to dig into the 10Ks to evaluate them, and it can't, or it has to be producing revenue. Why does it have to be producing revenue? Because I did some analysis videos, loosely, probably a couple months ago now. And again, at this stage, I don't care about what the company does, what they say they're going to do. And if the company's not producing revenue, there is essentially no analysis because I can't analyze anything. If it meets those three criteria, let me know and I'll look at a stock anywhere in the world for you. What else? If you're listening on the podcast or on YouTube, sorry, make sure to like, love, share, subscribe, comment, all that good stuff. Very much appreciate you guys watching on YouTube. We'd also really appreciate if you do subscribe to hit the notification bell so you're notified every time we release a new video, and release new videos all the time. You'll also be notified when we do a live, which we're hopefully, tentatively, based on me and Charlene's schedules, are going to start up relatively soon again after some very good business things for both of us. So that have taken up some more of our time. But you'll be notified anytime we do those as well if you hit the notification bell. If you're listening to the podcast, again, thanks so much. Make sure to do all that same stuff or the equivalent on the podcast. On the podcast, though, we'd really also appreciate your review, because the more reviews, views, and listens we get to our content, the more people we can help. If you're looking for more information on how to become a better investor faster, make sure to check out our free resources below, including our 5 free gifts. You can get the full preliminary analysis worksheet below for free as part of the 5 free gifts, plus you get 4 other free things as well. You can also get a free copy of my book, How to Value Invest, free PDF copy of my book, How to Value Invest, and a free copy of my guide, 7 tips to picking great stocks and 3 times you must sell. You can get all 3 of those for free at the links below. If you're looking for more specific help from me on how to become a better investor faster, make sure to check out our Value Investing Masterclass, which you can go to below or go to mastermind.valueinvestingjourney.com, mastermind.valueinvestingjourney.com. In this masterclass, you will learn from 85-ish videos. We're redoing the videos, so I can't give an exact number, on how everything I've learned over the last 15 plus years to find, including exact locations of where I look for these stocks, evaluate, read financials, 23 different valuation techniques. We don't talk about DCF valuations. Everything you need to know in these on how to evaluate stocks better, faster, more efficiently, including the 23 valuation techniques, which require no greater than 6th grade math. We don't use fancy Excel formulas. We don't use DCF calculations. We don't do any of that quote-unquote high-level math. If you understand 6th grade math, you can do any of the evaluations we're going to teach or that you learn in the course. There are also $9,000 in free bonuses available to students, to the first 10 students who sign up, and much more. And you can find out about all that information, including the bonuses, including the WhatsApp group, including the Facebook group, including the free live group trainings, and much more at the link below. Or again, go to mastermind.valueinvestingjourney.com, mastermind.valueinvestingjourney.com. Until next time, have a great day. Talk soon.